Hello, welcome to another chat experience. So in our previous video, I talked about how to grow a small account, and I'll be continuing this in the second episode, right? How to grow a small account very fast. So in the previous video, I talked about how to manage and grow a small account. So we'll be continuing on this on the second episode. So just go back and watch the first video or the first episode on how to grow a small account very fast. So let's say we have this, okay? So let's say we have this and we looking at entering this trade. This is a 1 hour chart. So let's say the trade plays out and let's say we have something like now. Okay, now remember this is not showing you, this is not a an entry strategy or yeah, this is not an entry strategy for you to execute a trade, but just how to manage and grow a small account. Okay, so let's say we have this. Okay, so let's say we set our buy around somewhere here. Okay, let's see if it plays out well. See if it plays out well. Okay, good. So in growing a small account, one thing actually you're looking at is how to manage the account or manage your funds, right? So in everything you do, let's say you have $100 trading funds and you're looking at growing it. One thing you're looking at not having drawdowns, right? So you're trying to see how to protect or grow that small account. So um, in this second episode, what I'll be talking about is using trailing stop. Okay, the one way to do it is to make sure you give the trade or price to have some breathing space, right? Shouldn't. It's not good to just okay. You're doing a trailing stop and you follow it very closely, right? Except you're following it at the point where market is going to reverse or price is going to reverse. Then should you follow it closely to maximize profit and exit almost at the point where it reverses, right? But apart from that, one way to do use trailing stop and follow your trade and just watch price continue going up depending on the market or price movement or action, right? So it's to just follow price, not that closely, but as in giving it space to breathe. Okay, sometimes depending on the movement, you could do it based on percentage, right? You could say, okay, we move it based on 0.5%, let's say from here. Now, this is crypto, okay? The crypto market movement can be crazy, unlike that of Forex, okay? So having 0.5% movement is just crazy here in the crypto, right? So let's say we're doing this and then we decide to move this uh, based on this particular movement. Now we say, okay, we do this by 1% or 1.5% or 2%, okay? So we have this at 2%. So we set our trail stop at 2% around this high here or at this point here, okay? We could just put it at this point here. If you want to use percentage, good. But if you don't want to use percentage, for me, you just move it gradually, giving it space to breathe, okay? So let's say we play this out and it went up. So we move our trail stop somewhere here. You could move it down to this last candle here after this one has moved up, but I would not advise that because the trade could come down to get more space, about 50% of this candle before moving up, right? So you just move it a little bit, right? And then let's play this and see what happens, right? So after this, you could just move it to maybe this last end here. Now, depending on your movement, depending on your understanding of the market, understanding of structure, understanding of liquidity, and all of that, right? So now you see price is coming down. Uh, so you could move it a bit up depending to maximize the profit, right? You're following it gradually and then price went up to this point and then you move your stop to this point, right? And then price did this, right? Oh wow, that's a great move. Now, depending on your understanding of structure, let's zoom this out to see what it is like, right? So now if you understand structure, you understand liquidity, you get to understand that we are at the point where price could um, probably reverse, right? So for me, at this point, if I have my stop here, right? If I have my stop here, I would have exited this market at this point, okay? I would have closed my trade here, right? You say, why would you want to close your trade here? Because based on what is it called, the market structure, based on understanding liquidity, the next thing that would happen here would be more like a grab of liquidity around this swing, I mean, these equal highs, right? So what you expect is price to grab the liquidity around this place and drop, right? So for me, I will look at this as a grab of liquidity, right? I'll look at that as a grab of liquidity. It could go up much further, but at this point, I wouldn't mind if, because this is a scalping trade, right? I wouldn't mind closing the trade at this point here. I wouldn't mind closing the trade here, exiting using limit order, okay? Using limit order to exit the trade here, using limit order to exit the trade. Why? Because there's a lot of liquidity here. So I would have set my, what's it called, my exit around this point, right, with using limit order to exit. And then apart from that, now this is crypto market, right? I always tell people not to just have limit order just like that. So which means if I have a limit order set around this side to exit the trade, one other thing I do is to set a market stop or a stop market, okay? To set a stop market somewhere there. Now, the reason I will do that is should my limit uh, order fail to fill, which will eventually actually to fill because this place is what's it called, a very good pretty order block where there's a stack of liquidity around this place and up to this point, right? So there's no way it will not get filled. But if let's say in the event where it didn't fail, right, I always will put a market stop just below it. Reason is because, like I said in the previous video, the volatility in the crypto market can be very crazy. So you just can't leave the market unattended to, right? Even if you're not there watching the trade, you should know how to manage your trade. Don't set what's it called limit stop as your what's it called your stop loss in the crypto market. Don't set limit stop as your stop loss. Always use a stop market order as your stop loss strategy or your exit strategy. So, but now let's say I'm taking profit around this side based on this order block. I would have set a limit order here around this place, maybe at premium, and then also have my stop, what's it called, stop market around this point, right? Now, should this limit fail, this limit order fail to fill, it will exit for me at stop market. So let's see what happens when it got there. Okay, right? So price immediately dropped. Now that's what I'm talking about. So that's that. How to use trailing stop to follow price and make profit, right? To maximize profit and also to yeah, to grow your small account. So see you in the next video where I'll be talking about something else. And stay tuned. Make sure you subscribe to this channel and like this video.